Good morning. You're watching Business World Live. I'm Danie Laurel. It's 10:30 a.m. This hump day in Manila. We are about an hour into the shortened trading day. Let's kick off with our banner. The government is confident that inflation is still manageable. That's despite supply issues arising from the COVID-19 pandemic. Finance Undersecretary and Chief Economist Gil Beltran said benign inflation will give policymakers enough room to move. That's in sustaining policies aimed at stimulating economic growth. Inflation accelerated to 2.5% in the month of June from 2.1% in May. That's due mainly to faster increase in transportation costs and the prices of alcoholic and tobacco products. But the Department of Finance noted that the easing of food prices tempered that increase. Year-to-date inflation is averaged at 2.5%. That's well within the target range of 2 to 4% by the Bangko Sentral. And over at the BSP, Governor Ben Diokno told Bloomberg TV that the central bank will likely keep an accommodative stance over the next 2 years to cushion the effect to the economy of the pandemic. Diokno says the crisis may be protracted and says policymakers may have to wait for a few more quarters before adjusting the benchmark rate again. Diokno himself earlier said there is space to adjust policy further, but there's no immediate need to cut the rates in the succeeding quarters. The central bank has so far cut its benchmark rate by 175 basis points to 2.25% this year. Changing it up a little bit, guys, opening my terminal with you with, of course, our local currency. So a lot of things going on here. I'm just going to reopen the terminal here. But you've got the peso moving quite strongly today. You're seeing it trading at 49.465 to the greenback. That's actually, you can see here from the month of March, our local currency on the strengthening trend. So that's a downtrend in terms of the charts. But what's very interesting here, let me just try and share that screen. I think the connection actually did not allow it to share. There you go. I hope you can see it now. There you go. So again, our local currency trading at 49.465. So a lot of things have happened. The peso did fall after the BSP signaled that rate action pause. It had weakened on the back of the remarks of Governor Diokno, especially to Bloomberg TV. Plus, apart from those remarks of the easing stance, you've got reports that the restrictions in Metro Manila are likely to stay. Today, of course, is the last day until the government will decide on whether to extend the GCQ here in Metro Manila and whether stricter measures will be reimposed on some of this city. So this has also weighed on sentiment according to some traders. Other things that may be weighing on the peso this week, there are the remittance data coming in. Analysts are saying the peso may continue to depreciate versus the greenback. The market is awaiting that. Recall that the last print, that was March cash remittances, showed that it had contracted by 4.7%, and the expectation is that the April remittances will be a contraction that is much wider than that. Now, another thing that is weakening is actually weakening rather the peso, is the fact that there are fresh geopolitical tensions between the US and China. So a lot of haven demand for the dollar and other stronger currencies. But what's very interesting here is that it's not just the peso that is actually weakened in recent days. And in fact, if you do see the chart, despite the fact that the peso might have had some taken a beating, it's still on a year-to-date basis the strongest in terms of spot returns when you compare it to the rest of the Asian region. So very interestingly here, Philippine peso stronger year-to-date than even the Taiwanese dollar and the Japanese yen and the Hong Kong dollar. So a lot of very interesting things. The other Asian currencies dropping worse than our local currency. Now let's take a quick peek at how global equities have performed. At least on Tuesday, you can see a lot of euphoria or energy happening over in the US, with the Dow Jones surging up by 2.1%, S&P 500 and the Nasdaq as well. That's despite Europe still very mixed. Now recall that yesterday there was a lot of tensions on the geopolitical front in the United States. We had reported that the United States had taken sides in the South China Sea dispute against China. This is the first time that they had actually taken sides. They had usually refrained from speaking out in terms of that. Meantime, President Donald Trump had also said he had issued an order to end Hong Kong's special status with the United States, signing legislation that would sanction Chinese officials. So there's a lot of things going on there. And on the virus front, I'll just pick up Asia Pacific for you. Hong Kong imposing its strictest social distancing measures yet to contain a resurgence in virus cases. Japan saying that a new state of emergency is possible. Singapore in a recession after its GDP shrank by 41.2% quarter on quarter. Still, we are seeing a very mixed picture here. You've got the topics and over in Japan in the green, but you've got, for instance, this Shanghai and Shenzhen in China in the red. So a very mixed picture here. Singapore in the green, but Malaysia in the red. There's still some optimism there because of the fact that Moderna's COVID-19 vaccine had produced antibodies in all patients tested in an initial safety trial. This is what analysts are saying might be rising the S&P 500 contracts, which are trading right now in Asia. Now let's take a quick peek at our own local PSEi. That, however, is extending the losses midweek. So definitely not following suit with how Wall Street performed. That is down by 1.3% in just the first hour of trading. And what's worrying here, if I pull back the chart, it's actually following the declines that we had seen, or at least a flat performance that we had seen yesterday, following declines that we had already seen also on Monday here. And it actually traded mostly in the red yesterday before some last minute bargain hunters had lifted it. And not very surprising here, Phil Stocks' Claire Alviar is saying that investors are waiting for the government's decision on the quarantine measures. And, just to update our viewers here, this from Bloomberg's coronavirus cases in the country more than tripled since the month of June when the lockdowns were eased. There were also a lot of reports that had rocked the equity markets yesterday when a lot of hospitals in the capital had actually mentioned that they were already at capacity. And Vergier, she is of course from the Department of Health Undersecretary, is mentioning that the utilization of the COVID dedicated beds are now 76% in the capital region. So Ms. Alviar of Philstock saying that this uncertainty about what is lying ahead is resulting in weaker trading. There's a lot of lower average turnover values, just around 5 billion pesos in trades. Let's take a quick peek, however, at our banks. This one, of course, a lot are in focus here after the comments of the central bank governor Ben Diokno here on what he's doing, not just in terms of monetary easing, but also on the strength of our local lenders. And one thing that is really in focus here is what's going to happen to the loans of ABS-CBN. Now, the Bankers Association of the Philippines has actually chimed in on that. They said that they are confident in the capacity of the banks to manage this credit portfolio in relation to ABS-CBN. Now, ABS-CBN has a total debt of 27.3 billion pesos. And this is according to Bloomberg. A biggest chunk of the pie is actually with Union Bank. So Union Bank has given them 11.35 billion. And the other big lender here is BPI. And Phil Starr had reported earlier on now that these banks, so particularly Union Bank and BPI, have now engaged in talks with ABS-CBN. You've got Edwin Bautista, who is, of course, the president and CEO of Union Bank, telling the Philippine Star that they are confident ABS-CBN would be able to continue servicing its debt and that they have had constructive discussions. Same goes for BPI president and CEO Cesar Consing, saying that they're committed to support the clients, including ABS-CBN. So very interesting here. And also this follows the comments of Central Bank Governor Ben Diokno, who said that there is no indication that financial markets are impaired irreparably by the pandemic. You can see on your screens here, BPI, however, the worst performer today, at least for the first hour of trading, down by 2 2/10%. Union Bank trading flat. And I just want to close with property space here, because a couple of news in terms of two of our builder developers. Let's kick off with Vista Land. They are actually seeking to raise $200 million and refinancing. So that is actually senior guaranteed notes. And the coupon rate will be 7.25%, and the proceeds will be used to refinance their existing debt here. Let's try and take a look at Vista Land. It's actually the worst performer now on the back of that news that they are tapping the bond market, the loans market rather. They're actually seeking to raise more senior guaranteed notes here. That is down by 3.5%. And finally, you've got DMCI giving guidance for the rest of the year. DMCI saying they're having their 2020 spending with the property unit to see the deepest cut in the capex. They're cutting their capex to 19.4 billion pesos. This is according to their chairman, Isidro Consunji. So a lot of things going on. Property unit will bear the brunt of the spending cut. Land banking expenses will be slashed to 4 billion pesos from an initial guidance of 19 billion pesos. So more on markets later on in the broadcast with First Metro Asset Management's Edser Trinidad. Let's check in on other headlines we're watching this hump day. Let me just scroll down for you. A lot of notes here for me. There you go. Workers in the business process outsourcing sector are calling to put a stop to the practice of placing employees in floating status, saying it compromises their job security. The BPO Industry Employees Network said workers whose jobs are affected by the pandemic should be redeployed immediately, while those who cannot come to work should be given financial aid and additional paid leaves. The group is also asking that BPO workers who continue to work on site should be given hazard pay. Now, for those on a work from home setup, companies should provide them with internet and electricity subsidies. The Information Technology and Business Process Outsourcing Association of the Philippines, or IBPAP, said the industry is facing reduced revenues due to challenges brought about by COVID-19. However, IBPAP says it fully supports occupational health and safety measures for the BPO employees. The group said the focus amid the pandemic should be to preserve jobs and remain flexible to the changing times. Now, after moves to tax the online sellers, the government is now closely monitoring online barter trading, which they say is only legal in certain areas in Mindanao. The Trade Department cited the ports of Siasi, Jolo, and Tawi-Tawi as authorized barter centers in the country. The DTI said barter activity outside those areas would be considered illegal. The department said it received at least 10,000 online scam complaints from consumers in just the first half of 2020. The DTI noted that online transactions saw a spike during the quarantine. That's why it is reminding consumers and those wanting to start small businesses to stick to regular transactions, which is subject to tax. Energy Secretary Alfonso Cusi calls for the cooperation of the public and private sectors to ensure energy security in the country. That's according to a report by the Philippine Star. In a virtual conference, Cusi said that he wants the government and the private sector to band together to achieve the dream of an energy-independent Philippines. The energy chief noted, though, that the country needs to strike a balance between meeting our current energy needs and promoting renewable energy. Cusi said the agency adopted a technology-neutral stand on power development to achieve energy security. He added that the current energy situation in the country leaves much to be desired, and that is why the DNR said the country should consider all power sourcing options in the future, possibly including nuclear energy. Cusi also ordered a periodic review of the Renewable Energy Act of 2008 to find stronger ways to promote our indigenous resources. Okay, guys, 4 months into a quarantine, and it's clear that the virus is not going anywhere anytime soon. And as the painful reality sinks in for our domestic economy, how should investors cope? Now, here to weigh in, we have with us Edser Trinidad, First Vice President and Head of Investments and Research of First Metro Asset Management, or FAMI. Good morning, sir, and welcome to the stream.
Good morning.
So let's kick off macro. So many things going on, not just in the virus front, a lot in terms of monetary policy here, but also today is July 15, and we are awaiting a decision on what's going to be happening, whether the GCQ will be extended, whether some areas will be in a strict lockdown. You've got BSP Gov already saying we will not, hopefully not revert to another strict lockdown. Has what is being expected by markets today, sir? And are we happy with how the slow lifting is going on, or had we been actually hoping for more easing moving forward?
I think it really the market's movement right now already shows you the basically the reaction as considering that there's still a very high COVID case, so the possibility of extending GCQ is really the likelihood is really high because of the situation. The market is reacting a bit negatively in this prospect, considering that the expectations of that the market will be open further may be curtailed because of the extension of GCQ.
Okay, so you feel that people were actually hoping for less stringent policies already, and not necessarily expecting this W-shaped lockdown that has been going on, even if this has actually been going on all over the world.
Yeah, I think if you are going to look at the other countries, as the other countries have started to open up their markets, I think everyone expecting that the Philippines will follow suit. But
Mm.
considering that we still have a very high case of COVID infections, I think that the scenario is unlikely. So I think there's still some concerns that if the GCQ will continue to be enforced, then the expectations that the economy will recover may be slower than expected.
Sir, are markets, at least domestic investors, even concerned about these new brewing tensions geopolitically between the US and China? I mean, this was in focus, during the trade wars. It seems like an era that we've already forgotten, but this in the middle of
Mm-hmm.
COVID and us just trying to, scrape through. How big of an impact might this actually have on the Asian economy in general?
I think this is already as expected. I think Asia is much more interested in looking at the development in terms of the COVID infection. Um, that I think that is more higher in terms of their agenda rather than looking at this tension between the U.S. and China.
Okay, so putting that at the back foot for the time being. So let's talk about BSP policy. They have been doing the heavy lifting. They've mentioned they're pausing for now, but not ruling out more rate cuts if warranted, and also keeping the accommodative stance for possibly 2 years. What would this mean, especially if there's still inflation risks on the table here? Would that mean real negative interest rates? And what would that actually mean, having prolonged real negative interest rates for the economy and for our equities?
Well, this kind of scenario of having a negative real interest rate is basically a double-edged sword. On the
Mm.
positive, considering, let's say, if I'm a saver, I would rather spend my money, considering that the real interest rate is either zero or it may be negative. So I would rather spend my money rather than save because basically I'm not. If you also take into account inflation, then practically you're not earning your money. So
Mhm.
that should encourage spending in the short run. Now, it can be negative in the long run if you continue to spend. Then basically that also is also inflationary.
Mhm.
So I think the central bank has to strike a balance in terms of their accommodative policy.
Sir, what about derailing foreign investors from coming here if our rates of return are too low compared to what other countries in Asia might be giving?
I think we're not in the same. If you are going to compare our returns, I think we're in the same boat as other regions, considering that we're all suffering in this kind of
Mhm.
pandemic. So a lot of countries, in terms of their economy, they're also on the same boat. So they're all trying their best to really jumpstart their own economy. So in a way, we're not basically alone in having this kind of an interest rate environment.
Okay, so we actually still have space to compete.
Yes.
So let's move to broader markets. According to one analyst, a lot of investors, at least if you talk to retail investors, are
Mhm.
more focused on the small cap issuances rather than the big caps. There seem to be, there's a lot of euphoria with trading the smaller caps. You seem to have better returns if you just focus on these. What would be your strategy right now, given this volatility? Is this the right strategy? Are you still putting your money on the defensive plays? That may have already recovered from the March 19 lows, or are you starting to pick up the undervalued stocks?
Um, because we run a fund here, basically our strategy is to protect our investors um, and to give them a consistent positive return in the long run. So in our position, we're basically we prefer companies that are liquid and undervalued, and preferably right now we prefer looking at the blue chips rather than looking at the small cap, because the blue chips right now in terms of the valuation is they're fairly I think trading at a reasonable valuation as compared to in the past. Second, they're liquid,
Mhm.
so we can easily buy or we can easily sell our position depending on the situation.
Mhm.
Those kind of qualities, it's really hard when you invest in small caps,
Okay.
specifically the liquid share liquidity.
Okay, so still banking on the big guns there. Sir, has the markets, just from a technical point of view, have they been resilient? I mean, it's been very volatile as of late, but still, we haven't gone down below 6,000
Mm-hmm.
in quite a while, and the uptrend, if at least if you pull it longer from March, it doesn't seem to be going back to that. Can you say that the worst is over? Or and have you mentioned that there's still upside here, that the blue chips are still undervalued. What makes you think that, especially since we've already seen a rally?
I think first of all, even though Leo, we've seen a rally, valuations are still, I think, relatively reasonable relative to their historical valuation.
Mm-hmm.
Second, I think most of the blue chip companies have a some sort of unique or a dominant position on their respective markets or sectors. And if ever there's any some sort of recovery in our economy, and these blue chip companies will be the first company that can benefit from any resumption or any resurgence in our economy. So those are the main reasons why we still prefer looking at the blue chip names rather than looking at the the small cap names.
Sir, what are you expecting for second quarter results from the blue chips, and how would this move their stock?
Well, I think everyone will be facing a very challenging second quarter numbers because we came from a lockdown. Basically, the economy stood still. So earnings for this quarter may be very challenging because of those factors. I expect that although there are certain companies that should also be reporting some positive numbers, most particularly those that are basically into supermarket operations.
Okay.
Um, I also expect that telcos, in relative terms, um, will be, in a way, in a better position rather than as compared with the other sectors, because during the pandemic, telco services is basically one of the major, I think, needs uh, of every of every person. Um,
Right. Essential right now, especially with the work from home situation. So let's focus on telco since you've already mentioned it. Um, the two incumbents are still, year to date, some of 2 out of 3 or 4 best performers here. Why is there still room to go for them? Especially since they haven't actually had any pain compared to the rest of the local markets, and also given that you've got Converge about to IPO. A lot of analysts are saying it's exciting because the market wants an IPO, but at the same time, it's expensive. It might be expensive. It might be taking a while to recover the capex in this particular industry and to penetrate the two incumbents, which we've already seen with Dito Telecom having difficulty, meeting the targets and asking for an extension. Tell us your general sentiment on these new, let's say, 4 players now.
I think the incumbents will, and this has shown that their performance. I think they'll be able to. They are in a better position to face the competition with the newcomers because they already have the existing facilities, and it will take a while for any incumbent to match the scale and the capability of the incumbents. Second, I think because of the IPOs and because of the prices that were being dangled upon by the newcomers in terms of their IPO price, the market has just realized, hey, this sector is undervalued because the incumbents are trading at before they enjoyed a strong run up, they were trading at a high single digit PE. And
Mm.
considering that most of the newcomers that are coming into the market are trading at are basically the indicative price are being offered at double digit PEs. So
Mm-hmm.
I think the investors have realized, hey, considering that during the pandemic, the telcos will benefit from the lockdown, and in addition, if you are going to look at their basically um, their valuation, their valuation is seem to be attractive relative to the newcomers. In addition, if you are also going to look at their dividend yield, they also offer quite attractive dividend yields of about 4 to 5%.
Okay, and this given the fact that they've already cut capex, and shelved some plans like 5G for tel, for example. So let's close with properties. I had just reported a couple of developers. You've got, I mentioned DMCI cutting their spend, especially for the property space, and you've got also Vista Land trying to refinance their debt. What is going to happen here? What is the rate of development going to be looking like for 2020? Will they be able to finish the projects that they have already started? Or will there be a significant total scrapping of projects? Does this, affect the entire sector, or is it company specific?
I think in general, most of the players will continue to complete their existing projects. However, those that are in the pipeline or that are slated for launching will be either delayed or will be scrapped. Considering that I think going forward, the demand for new houses may slow down because of the situation. I think I don't expect that uh, the property companies will face the same problem as what we had seen during the ASEAN financial crisis.
Mm-hmm.
I believe that a lot of the property companies or most of the property companies are now, I think, well prepared for this situation, considering that their balance sheet are much stronger as compared during the AFC.
Sir, last question on that, follow up lang. Thoughts on the REITs coming online, A REIT and Double Dragon in general, but in particular, but also just in general. Will you be banking on REITs instead of the property stocks, given that the REITs are very specific to recurring revenues that are linked to commercial and office spaces, and
Mm.
malls and tenancy rates are dropping right now? What makes you think that this issuance might have some teeth?
I think one has to look at the offering carefully. First, look at their tenant mix, whether their tenants are basically POGOs or BPO, the quality of their tenants. Look at their contracts, whether most of the tenants' contracts are basically in a long-term arrangement. Second, you also have to look at the pricing, especially in terms of the dividend yield that these REIT companies may offer. Um, I think those are the factors that an investor has to really study before you invest in these REIT companies. I think uh, no one is insulated in this pandemic.
Mm.
Even the REIT companies are also um, you know even the REIT companies or a plain vanilla REIT property company, they have the same tenants. So
Mm.
you also have to really carefully look at the tenant quality of every REIT company that will go in the market.
Okay, so it's not about the product per se, but just the quality of the REIT
Yes.
and the tenants that it has, and a lot of research still needs to be done on that new exciting product. Thank you so much. That was, of course, Edser Trinidad from FAMI. Thank you, sir, for your time and insights.
Thank you.
And that's a first look into the business day. Today is Wednesday, July 15, 2020. Catch us again tomorrow, 10:30 a.m. I'm Danie Laurel, and we are One News.